Everyone, this is Rob Roy of Elliott Wave Options, and welcome to this week's U.S. market update. As you can hear my voice, I'm a bit under the weather. I'm in Colorado to see a concert at Red Rocks over the weekend with my son, and I don't know if I caught something on the way here or if I'm dealing with altitude sickness, but in true Chuck Norris style, we're going to fight through it, even though I didn't bring the hat with me because I'm afraid it wouldn't survive the plane trip. So I apologize for the voice. This will be an abbreviated session. We'll get through it together. In fact, the stocks that you see on your screen now will be the stocks we will cover, symbols we will cover throughout this update. And as always, you can go directly to a symbol you may have interest in using the chapters feature in the video. All right, so taking a look at the market, you can see that we had a big rally to the upside, moving higher. We are buoyed by today's jobs report. The jobs report came in today showing a gain of only 150,000 jobs, which was less than the 170,000 expected, but well under the 297,000 from September. So that just continued this bounce rally. I wanted to remind everyone by drawing this zigzag again that what we did was come down to the 161.8% extension in the market. You can see that we had this move down to the 100%, right back to the previous fib level before making an extended C wave. Classic Elliott Wave zigzag methodology there. Worked exactly the way it normally does. So coming down to 410 was not only the 161.8% extension, but looking back, you can see over time that we also had an area of support going back from April and May of last year. So it was a pretty logical point to bounce. Now, in last week's recording, we posed the question, we started into a new bear market. Well, obviously, we're not in a bear market yet because we haven't moved far enough to the downside to be considered a bear market. But it's important to remember that in bear markets, you can have pretty extensive rallies. And so what we'll look for now is to see if we can move above this 440 level. Right up till this point, right now, during this recording, we have bounced right up to this 440 level. You can see that's exactly where we are at the close today. So far, this only counts as an oversold bounce, a retracement back to previous resistance, what was support at 440, testing it now for resistance. If we can break above 440, that changes the narrative completely. But for now, that's all we've done is have this nice bounce. And the bounce looks a bit overdone, doesn't it? I mean, you know all the rules. No security in any time frame gets very far away from the 10-day moving average. You can see the separation there, multiple gaps. This bounce is overextended. And then we go over and take a look at the bond market, the 10-year that we look at quite a bit. And by the way, we've been talking about this a lot during TradeFinder each and every week. And if you haven't signed up for TradeFinder, please do so. You can do it with the link provided. We do it every Tuesday night at 9 p.m. Eastern time. We talk the markets. We look for trade ideas. And we have a live Q&A at the end. And we have a great community of traders that join us each and every week. Ask wonderful questions. Look for good stock symbols. Love to have you sign up and join along with us. So as I mentioned often during TradeFinder, that it's important to have at least some sort of a working knowledge of the bond market if you're going to be an equities trader. You don't have to be a bond expert like the two gentlemen I'm about to mention, but having a working knowledge is helpful. Now you can see that we have gone into the wave 4 correction on the 10-year. So we were moving up in the wave 3, and we were concerned about if that wave 3 continued all the way up here towards the 5, that could be pretty devastating to the market. Well, we did get a little reprieve. Rates have backed off. And two of the guys that there's not a whole lot of pundits that I listen to in the markets, but two guys that I do pay attention to because I do understand the importance of the bond market and its relationship to the equities market. Remember, the bond market is larger. There's more money in the bond market, and it's viewed that bond traders are pretty sharp. One's Jeffrey Gundlach. both these guys are known as the bond king, so pick your favorite one. But he came out and said, hey, we're going to have a recession going into the early part of 2024. He even made the comment, put your money in T-bills and stay away from equities for a few months until we get through this recessionary period. And then he does view that there will be some sort of talk of a rate cut in the first quarter of next year, at least talk of it, as the recession comes in. And then on top of that, we have Bill Gross, who used to be the head of PEMCO. He was always talked about as the bond king as well. He said the exact same thing, that there's a recession coming and that he urged caution for equities traders. So just talking about let's not get too caught up. It's been a nice bounce rally, that's for sure, this week, but let's not get too caught up and too comfortable that, hey, the bottom is in and we're ready to rally. We've got to break that 440 level with confirmation before I'll say that the risk to the downside has abated. Looking at the dollar has also come in and helped us out a bit with a little bit of a break off. And in fact, we closed at 105 today. So we're actually down in here. I haven't gotten the updated price from the futures market yet on the dollar, but that's where we are. And tell you that's the point that we are. So creating a wave 4 in the dollar, creating a wave 4 in the 10-year. So even though, again, it's been a good week, if these 5-wave Elliott Wave patterns hold true, these impulse patterns, that means that the 5th wave still has to come. And so we start moving back up in rates. We start moving back up in the dollar. If that occurs, then we're likely headed back lower in the equities markets. And so taking a look at the VIX, you can see that big move to the downside here. We had this zigzag pattern I showed you, and people actually have commented, why do you show zigzags and things like that on the VIX? And it's because it's a chart pattern. And look what happened. 100% extension on the VIX. And so we hit resistance there and we've backed off in a big way, retraced the entire C wave. That's what's supposed to happen when a zigzag finishes. If it's not going to be a double zigzag or continue into another one with an extended level, then you retrace that last impulse move, the C wave, and we came right back down to the B. And so that makes you a little bit concerned as well for some perhaps a little bit more volatility moving into the beginning of next week. Bitcoin has been hanging in there very well, following this big run to the upside for many reasons. The Bitcoin ETFs that are coming out and the halving in the beginning of next year, the first quarter that we've been referencing. But after this big rally to the upside, moving sideways and consolidating there is extremely impressive, at least so far on Bitcoin. And then Coinbase, we mentioned Coinbase. We get that talked about every Tuesday on TradeFinder as well, and our insiders meeting on Thursday, which is for our alert subscribers only at ewotrader.com. Always ask about Coinbase. And my comment, even on this recording last week, was as long as we stay above 70, I think it can be long Coinbase. And if Bitcoin continues this rally to the upside, it could drag Coinbase with it. Well, Coinbase had a really impressive earnings report. They were forecast to lose 53 cents. They only lost 1 cent. So they're looking at profitability coming forward. So I think perhaps something has started here in Coinbase. I think you could continue to take a look here. We've broken above 80, which was key. And you can see that with a little bit of follow through today, if we can hold that the beginning of next week, there's a chance that we could be running up to test those highs from back in July on Coinbase. So there may be a really nice trade here on Coinbase. Let's see if we can hold this break above 80 at the beginning of next week. Again, if we get a little volatility, as I expect, let's see if we can hold above 80. And if we can, then I think you may have something there. I know a lot of you ask about that. And then we have Apple that reported earnings last night. And there's a lot of chatter been going on between around the financial pundits of can the market continue to move higher without Apple? And the expectation was Apple was going to have a rough earnings report. and they did show their fourth consecutive quarter of declining sales. However, as you can see, we did have a decent bar there. It still finished down for the day, but it was a pretty decent bar following the gap up ahead of earnings yesterday. And that was because their margins actually expanded slightly. Institutions love to see margins expanding. So even though total sales are declining, if you can hold the margins, you can still make some money. And we all know that Apple has a lot of money, but how long will the goodwill of expanding margins carry them if the innovation's not there like it was? And I just always think of Steve Jobs and what he would think of Apple now with the lack of new innovation since he passed. But anyway, let's look at a couple of you ask, and I tell you, I read all the comments. I appreciate when you add comments on the YouTube videos. Please continue to do that. We are so close to that 40,000 level. We are right there. Probably will happen this week. So next week we'll have a big celebration. We hit that 40,000 subscriber mark, and we will be giving away 4 of our level 3 alert subscriptions from ewotrader.com. They're worth thousands of dollars each. They cover directional trading, breakouts from triangles, and our AI-based income strategy, which is for stocks moving sideways with butterflies and counter spreads, things like that. So we'll be giving 4 of those away as promised. We just have to get to that 40,000 mark. So go out and round up a few more people to subscribe there, and we'll be set and ready to go. So thank you so much for helping with this push to 40,000, and we look forward to reaching that milestone together and giving those subscriptions away. So in the comment section, I was asked to look at PayPal, and they reported a very good earnings report as well. And I think there might be something pretty interesting here on PayPal. You can see that there's no 5-wave pattern. The Elliott Wave label is on. There's no 5-wave pattern. I always like to try to give a conservative view and an aggressive view, but this stock has been really beaten up. And one of the things I've noticed over the last week is stocks that have been not participating, not part of the Magnificent Seven, those stocks have been starting to rally. People are moving money and finding where they feel like they can get better value. And I think PayPal fits that mold. It's had a pretty rough time since May. And now we're getting a nice bounce off of a good earnings report. And so if you are an aggressive trader, I think you could take a look at going long now as long as we stay above 55. If you're a little more conservative, you'd want to see a break above that 50-day moving average, which is the royal blue line. You can see a break above the 50-day moving average. Then we may have a run possibly as far as coming all the way up to fill this big gap that is yet to be filled up in the 70 area. So yeah, I think there's something to look at there on PayPal. So good question there. So again, the aggressive and a bit more conservative takes. And then Tesla, I don't know if y'all saw, but Elon Musk did an interview on Halloween and was looking at, he brought in the Cybertruck, was talking about it. Joe Rogan thought he could shoot an arrow through it, and he said, no, you can't do that. And they bet $1, and he went out there and he shot the Cybertruck with an arrow, and it destroyed the arrow. So it was pretty interesting. But excitement about the Cybertruck coming out. But Elon has warned that it's going to take 12 to 18 months before that really starts to become a positive effect to the bottom line. And he was really preaching woes from production on how difficult the production is. And I think he said 10,000 things have to go correct to finish one Cybertruck. So basically what he was doing, in my opinion, was warning that the amount of production may not hit the goals that they're looking for. But nonetheless, we did hold 200 here on Tesla, bounce back to the upside, perhaps if the market doesn't get too weak, too volatile next week. Perhaps we come up and fill that gap around 250, and then we'll have to take another look at Tesla and see what happens from there. But we had the nice breakout here from this triangle pattern on Tesla and held the area that it needed to hold. If it hadn't held 200, then we were probably looking at 160 down here with those April or May lows. But so far, so good. We've held that area. Look at the moving averages. There's the 200-day. That's where we are right now. And we look at the 10-day moving average, you can see we broke above that. And notice that the 50-day moving average happens to coincide right there at 240, where we would be filling that gap. So perhaps we bounce there again and take a new look. I do apologize for the voice. Thanks for putting it up. I'm sure it's not too pleasurable to listen to, but I wanted to at least get some information out there to you on this week with everything that's been occurring and the bounce in the market. So thanks. Have a great weekend. Let's get to that 40,000, and then we'll have a big celebration in the market update next week. Take care, everybody.
If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.